Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. It's all about the Fed, who not only raised rates today, they also see more big rises before the end of the year. As expected, the US Central Bank has raised its policy rate by 75 basis points to 3.25%. Interestingly, that is now above the RBNZ policy rate of 3% for the first time since March 2020, and outside the pandemic period and the period immediately before it, the first time in more than 20 years. It was also their highest since early 2008. And the US Fed has also significantly raised its sights on where its policy rate is headed in its battle against inflation. By the end of 2022, they expect this rate to rise to more than 4%. Markets have priced in a year-end rate of 4.25%. A year out, they now see a 4.6% Fed funds rate, up sharply from 3.8%. And their view of how that comes down from here is now much more restrained. This is a slightly more hawkish view than they had previously signalled. In other data released overnight, US mortgage applications actually rose last week from the week before, a rare rise in a declining trend that is now down 30% from the same week a year ago. A large part is due to fast rising interest rates, with the benchmark 30-year rate now at 6.25% and up 25 basis points in just 1 week. American existing home sales slipped in August, although they didn't slip as much as they did in July. But it does extend the streak of declines to 7 straight months. Rising mortgage interest rates got the blame here, and of course it won't get any easier after today's Fed moves. And the Asian Development Bank has downgraded its forecast for China's 2022 growth to 3.3% from 5% in April. The bank also cut its projection for the next year to 4.5% from 4.8%. At the same time, it said the emerging Asian region is forecast to grow at 4.9% instead of its earlier April 5.3% forecasts. It's been rare for China's expansion to be significantly less than its much smaller neighbours. In Australia, their central bank said it will not pay a dividend to their government for a number of years as it nurses balance sheet losses relating to its bond purchase program that could top $58 billion. The US Treasury 10-year yield starts today at 3.51%, and despite some sharp initial reactions higher, has now fallen lower than that level this time yesterday. And the price of gold will open today at $1,684 an ounce. This is up $18 from this time yesterday, moved only after the Fed news. And oil prices start today down $1 from this time yesterday at just on $83 a barrel in the US, while the international Brent price is now just on $89 a barrel. And the Kiwi dollar will open today at just on 59.1 US cents and 20 basis points higher than this time yesterday, following the US Fed signals. Against the Australian dollar was slightly firmer too at 88.3 Australian cents, and against the euro we're actually up 0.5 cent to 59.5 euro cents. That all means our trade weighted index starts today at 68.8 and up 20 basis points. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.